Hey guys, Tom here from the Investing with Tom YouTube channel, and today we're going to talk about why the heck Warren Buffett has so much cash. So how much cash does Warren Buffett have right now? I hope you're sitting down for this number. At this stage, so I'm filming this in February 2019, right now Warren Buffett has 100, I hope I get the zeros right here, 100 billion with a B dollars in cash. So why is he sitting on this much cash? Why is he not out there investing it? He's the greatest investor of all time. Why can't he find a place to put this cash? Why is he sitting on so much? And should we be doing the same? So this number here, $100 billion, is currently more than double the amount of cash that Warren Buffett's had with his company Berkshire Hathaway in previous sort of business cycles. This is far more cash than he's ever had. And I wanted to take the time to talk about why you might actually want to hold on to some cash yourself. What are the pros and cons of holding on to cash, and what should you be doing in today's market? Firstly, let's talk about some of the downsides of having a lot of cash. It's a problem that all of us would love to have, I'm sure. But in terms of investing and generating high rates of return, let's talk about some of the downsides of cash. So when you sit in cash and you don't invest that money, essentially it's making a zero return. Interest rates are very, very low at the moment. If you invest in bonds, you're looking at maybe 2% max on a kind of longer term bond, and it's not a very high rate of return at all. So when you are sitting with cash in the bank, let's say you don't invest in bonds or anything, it's just literally sitting in a checking account in your bank, what you're looking at is probably about a 0.5%, depending on where you live, 0.5% return on that cash. Essentially nothing. Inflation is something like 2% per year at the moment, so you're basically going backwards 1.5% by just leaving cash in the bank. So that's the main downside, and there's a term for this out there in the mutual fund industry called cash drag, and what that basically means is if you don't have all of your portfolio actually invested at any point in time, you're dragging down the returns of the overall portfolio. So let's say that the stock market goes up 10% in a single year, but you're like Warren Buffett and you're roughly 50% cash at the moment. What that means for the overall portfolio is that 50% of your portfolio went up 10%, and the other half, the other 50%, essentially did nothing for the entire year. So what you end up with as a result in the overall portfolio is a return of only 5%. You've literally cut your potential rate of return in half by sitting in cash, and this is something that, as I said before, is called cash drag. So we know that the vast majority of mutual funds out there don't beat the market for various reasons. One of the reasons that holds them back, again, is something called cash drag. They're sitting with a percentage of the portfolio in cash at all times because they're constantly buying and selling stocks quite short term compared to what most really successful investors are looking to do. And that's dragging down the returns. It's called cash drag. Not a good place to be if you're wanting to act like most mutual funds do and sort of match the index. So those are the downsides of sitting in cash. Essentially it pulls down your potential returns, at least in the short term. So let's look at some of the pros of sitting in cash and why I actually think a couple of reasons why Warren Buffett's sitting in so much cash at the moment as well. So why on earth would the greatest investor on the planet be sitting in cash? Someone who's well aware of the effects of cash drag and the negative impacts on returns that sitting with a lot of cash has. Why would someone like Warren Buffett go ahead and do that? So there's a couple of reasons, and essentially anyone that's studied Warren Buffett knows that he really doesn't focus on the macroeconomics. He loves to look at individual companies, and he doesn't go around speculating about where we are in the business cycle. What he says and what he actually does in practice are sometimes actually some slightly different things, and I think this is something that we're starting to see with Berkshire Hathaway at the moment. So typically towards the end of a business cycle, you'll see Warren Buffett start to accumulate a lot of cash. And in part that's due to his strategy, and in part that's due now to Berkshire Hathaway's size. So first let's get into his strategy. Essentially, Warren Buffett is out there, value investing style, trying to buy $1 of value, for a price of 50 cents. That is Warren Buffett's basic investing strategy, boiled right down, keeping it super simple. He's looking for companies that are undervalued for whatever reason. Possibly they've had a rough last couple of quarters or a rough year, or for whatever reason the market is pricing them at far less than what he believes those companies to be worth based on their long-term prospects. So this is Warren Buffett's basic strategy. And what we're seeing at the moment is that the stock market has essentially gone like this for the last decade. The market's continued to go up. There's not been a lot of volatility at all up until probably the last year. The last decade, essentially everything's just been going up. So what that does to a guy like Buffett in terms of trying to find investments is it's really, really hard to find $1 for 50 cents when things have just been going up. There's a lot of companies worth $1 of value that are priced at $1. That's where most of them are most of the time. And when we're at the end of a business cycle and things have been just going straight up for 10 years, even the cheapest of companies are worth $1, or they might be 90 cents, let's say. And Buffett doesn't want to buy things for 90 cents. He wants a big margin of safety to offer him protection in those investments should something go wrong. So he's just not able to pick up companies. He can't find a big margin of safety. A lot of businesses out there, which I think was something I touched on in a previous video, are fully priced or even overpriced. They're selling for $1.10, $1.20, $1.50 in some cases if you run sort of discounted cash flow type valuations on them. So when you look at individual companies, there's a lot of businesses that are overvalued, and that's one of the reasons why Warren Buffett has ended up with a lot of cash, in my opinion. It's not a kind of conscious choice to just hold a lot of cash and not deploy it. I think it's actually part of his strategy is that he's just struggling to find anything. And what you'll notice is that he's not selling a lot of investments. He's just not buying. And when those investments continue to send cash to Omaha and he's got a lot of profitable businesses, this pile of cash that he's got is just continuing to accumulate, and it's starting to become a pretty massive percentage of his portfolio. So that's reason number one. Let's talk about reason number two, why I think Berkshire is sitting with a lot of cash at the moment. The next problem that Buffett and Berkshire Hathaway have is a problem that is pretty unique to Warren Buffett, to be honest, and that's to do with scale. So when I talk about scale, I'm talking about essentially the number of companies out there that Buffett can actually go out and invest in and build a decent kind of size position, a decent size investment in that company. So Warren Buffett, like we know, is working with literally hundreds of billions of dollars for like enormous amounts of money. So unfortunately that's a problem I don't have right now. I'm not working with billions of dollars. So what that means in the investment world is that I can invest in pretty much any company on the face of the earth that's publicly traded. There's no companies that are so small that I'm not going to be able to funnel a decent percentage of my portfolio into them. Buffett, on the other hand, if you look at this pie chart, the amount of companies Warren Buffett can invest in is probably a wedge of this pie chart smaller than I can even draw with this pen. So on the face of the earth, there's probably something like 10,000 companies across all the different indices around the planet that are publicly traded, that someone like myself could put half of my portfolio into if I wanted, into an individual company. When you're talking with Warren Buffett, who's looking to put tens of billions of dollars into a company, there's really probably only something like 30 to 50 companies on the planet out of those 6 or 10,000, 30 to 50 that are sufficient size for Buffett to go in and actually invest in. And that's a major problem, because when we've got a huge range of companies to pick from, there's always something undervalued. There's always $1 trading for 50 cents when you've got this massive range of companies to pick from. When you've only got 30 to 50 and they're huge companies, really closely followed companies, a lot of analysts, putting out projections for what these companies are going to do over the next quarter or over the next couple of years, these things don't go on sale very often. These things that are worth $1 don't get priced at 50 cents very often because they're so closely followed. And that's an issue if you're Warren Buffett. The only time that you're really going to be able to funnel a lot of money into these stocks is when something's going drastically wrong. So there's a massive recession, there's another 2008, or there's another 2000 to 2002 stock market crash. That's when he's going to be able to deploy a lot of money into these companies. Where we are currently in early 2019, the market's come down a little bit, but it's still close to all-time highs. It hasn't dropped 50% or anything like that. And really the only thing that Buffett's bought in the last couple of years, besides some smaller positions, is Apple. Apple's run up huge percentages over the last 2 years. He just can't get money in there at a reasonable price anymore. So that's a rather unique problem to Berkshire Hathaway. One I think a lot of people kind of tend to forget when they see this type of cash position and they're saying, why can't he find anything? There's thousands of companies. There's not many companies that Buffett can actually look that closely at and get a big chunk of his portfolio in there like his strategy kind of has been throughout the past. He loves to get big stock market positions built up in individual companies. Not a fan of diversification. When he really understands something and feels confident about it, feels strongly about that investment, he goes in heavy. So not a lot of companies, very closely followed. They don't go on sale very often. And again, that's another reason why Warren Buffett is sitting in cash. So let's talk about what you should be doing, what I'm personally doing in terms of cash versus equities, how invested am I, and what I think is going to happen over the next couple of years. So currently my thoughts on the overall market you've seen in previous videos. So I made a video very recently called Is the Stock Market Overvalued, where I went through my thoughts on why I think that people are currently paying full price, if not a big premium, for a lot of big companies out there. So essentially what that's left me with is a similar situation to Buffett. I'm not a full-time investor. I don't spend all my days looking into hundreds of companies. So my watch list of companies that I'm looking to buy is relatively small. And that's the first thing I'm going to recommend that you guys do and get together is a watch list. So a watch list is essentially a little bit like you might have on eBay or Trade Me here in New Zealand. A watch list of companies that you really like and you'd be willing to invest a large chunk of your net worth into. And on that watch list, what I've got is first, the names of the companies that I've researched, and like I said, I'm comfortable putting a lot of money into. And the second thing I've got there is a price at which I would buy them. So a price to buy. And at this stage, essentially, I am also trying to buy $1 for 50 cents. So my buy price is currently 50%. So this equals 50% of what I believe the value of that company is. 50% of the value. And it's a short list. They're reasonably well-known companies. Some are, less than $1 billion market cap, but most of them are quite large. And essentially, I'm just sitting and waiting for them to kind of come on sale. I'm waiting for those prices to drop to my buy zone. Then I'm going to start funneling some money into those companies and building up positions in the portfolio. So where am I currently sitting at this stage? I'm roughly 50-50. So I'm roughly 50% cash and I'm roughly 50% invested in stocks. That's about where I'm at the moment. This cash position will essentially continue to grow up to go up as I basically continue to kind of save money in my general life. So that cash position will continue to rise if opportunities do come up, if we have a correction in the stock market or some of these individual companies that I'm looking at come on sale. That cash position will go down. I'll start to move some of that money across into investments. And like Buffett, I'm really not looking at the overall stock market. I made a video on the overall stock market, but that's not what I look at in my overall strategy. I focus on individual companies, and if I think the market is highly valued, but there's a company that I'm following closely that is not overvalued, that's actually at a big discount to the intrinsic value, I'm going to buy it. Okay, so that's my strategy. That's what I'm currently doing. The reason it's 50-50, there's really not a huge amount of logic behind that, to be honest, other than I just haven't been able to find opportunities, and this cash position has just continued to go up over the last year or so. So that's where I'm at. That's my thoughts on Buffett's cash position. I hope you enjoyed the video. If you did, drop it a like and leave me a comment and hit subscribe. I'd love to see you here next time as well, but that's all from me today. So cheers.